All right, guys. The highlight today takes a lot of things into effect. The news, correlated market. What do I mean by that? Well, if you don't know and understand and follow news, you're going to have trouble understanding, well, why did that happen? Why did this happen? Crude oil. You don't have to trade crude oil to know the DOE stats that come out every Wednesday at 9:30 Central. That number was right here. If you look at my screen, came across at 15.2 million, a build, huge build, right? The biggest since April, but that was the pandemic. Before that, I don't think I've ever seen a build that high. What that means is there's a lot more supply in oil than the market expected. So what happens? More supply, same demand, lower prices. That's this move right here at 9:30 Central, right? They sell it off 40, 50 cents. They step on it again for 40 or 50 cents and they break it over a dollar. That's not as big of a move that I thought, but it's a pretty substantial move. Why does that matter if you do not trade oil? Because the energy stocks are going to have trouble rallying. They're going to be weak, and they represent enough portion of the stock indexes, if you trade the S&P minis and the Nasdaq, to have an influence. If you have a sector in any of them, financials, energy, it's big enough or weak enough, then it's going to affect the overall stock market. There is no reason or coincidence, rather, that right at 9:30 they started to get weak, had to do a little head fake to really step on it, but oil stayed weak. The S&Ps eventually did this, and then they stayed weak. And this analysis is what you got to talk about, whatever community you're in real time. We go over these highlights, but there are things that we talk about as this stuff's happening. This first move is McConnell, the Senate Majority Leader, saying that the Democrats keep moving the goalposts. That's being pessimistic on what? On the stimulus bill. Well, you have to know that the stimulus is driving equity prices, at least short term. They're going to do it, we rally. They're not going to do it, we break. So they hit them. They rally enough to kind of get the market thinking, wow, that was just, temporary. And it probably would have been. But then the oil inventories come out at 9:30, and then it became a 1-2 punch. It couldn't withstand both stories. These headwinds, with understanding them in real time, put you in a position to get on the right side, which allows you to do by default, keeps you off the wrong side. But this is important. This is objective bias opinion creation, using news, using ancillary markets to formulate a bias. Hey, it might overlap with a profile bias if you're a profiler, or some other bias that you might have had coming in. This is objective, though. This is okay. McConnell's comments are bearish. Oil inventories were bearish for oil prices. And generally, weak oil, when it's that weak stocks, weak stock indexes. Understanding all that puts you so far ahead of everybody else. It's not even funny. It's like you going into the bar when you were single and all the guys left.